Hey everyone, it's Evan here from the Trade Risk on Friday, May 12th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then look at just a couple of sectors at the end of this video. I'm a bit pressed for time today. I got some friends flying in that I need to make sure get picked up from the airport, so I'm off to do that as soon as I finish up here with this video. So a little bit shorter, but not a whole lot has gone on. So let's take a quick look here at the S&P 500. We'll start there, down 33 cents here on the day. If you go to the weekly chart, we'll start there, down minus 65 cents on the week. Let's go to the cash market here, so down minus 0.38%. And you can see exactly where we're stalling out here. These were the highs from the March, the 3rd of March that we made back there, or at least on a weekly basis. I believe that was actually on the 1st where we made highs above 2,400, and you can see we stalled out there, we tagged new highs, and then we pulled off, and we just really haven't seen the market show a lot of enthusiasm to get over those highs just yet. Not a whole lot going wrong. There's not, we're not seeing a violent reaction to the downside. We're just seeing stagnant action, just a lot of sort of wait and see sideways chop. And that's the way this week has sort of continued. If we go back to the daily chart of the SPY, you can see, we opened up the week right here at this 239.77 was the open. We closed 77 cents lower after 5 days of trading. 3 of those days were just spent in the same, 50-cent range or so. And then Thursday gave us a little bit of volatility, gave us a tail all the way down to 238.13. And, for you active traders, if you want to be active in this very sort of difficult chop, which seems very difficult to sort of profit from, at least on the SPY, below 239, below these lows here, Monday, Tuesday, and Wednesday of this week, you could certainly make, a slight tilt to the seller's favor here as we start to sort of lose the highs, lose these lows, and come back into this old range here. That is, something where you could be a little defensive, cautious, or at least have that selling sort of bias. Again, really tactical short term, if you even want to play inside of this chop. From longer term perspective, of course, now we have momentum that is starting to wane a little bit, right? The S&P 500 clearly starting to roll and pull off of these highs. Again, trend remains higher, momentum weakening, breadth also weakening. So there's a few different, 2 of the 3 factors that we certainly look at, trend, momentum, breadth, are starting to weaken up here. And it's something to pay attention to, again, more from the tactical standpoint, but from a swing trader, active swing trader standpoint, something we want to pay attention to. A weekly term player, someone on a longer time frame chart, probably doesn't care a whole lot about what's going on right now. This all looks pretty healthy behavior, retesting highs, waiting to see some type of reaction. 8 and 20 period on this weekly chart, still very bullishly aligned, still have some momentum here on the weekly chart. So really depends on where your domain is, where you live. Again, I'd say for that clear sort of signal to the upside, it's taking out the highs with authority. So if we come in Monday with a nice strong candle back to the upside above 239.75, above 240, that's of course a nice risk on, thumbs up kind of go signal. Otherwise, we're still just here in this chop, potentially rolling over here if we start to break back down below Thursday's lows, below 238, maybe come back and fill some of these gaps like the IWM did. That's the more sort of pessimistic scenario. Doesn't mean we have to have the apocalypse sort of develop, just means we could pull back 2 or 3%. So that's the sort of summation here on the SPY, back and forth, sideways chop for the most part. Depending on where you live, you either care about it right now or you're just sitting on your hands and waiting for some more clear price action to sort of develop. On the IWM, this is what's probably a little more cautious here, or at least gives a little more of a cautionary tale, is the fact that the IWM is starting to lose this 138 zone. All of these clusters of tails here, these lows that have been defended, we're starting to get a close. We get the lowest close of the week here on Friday. A little bit of a bounce, some life here still off of Friday's lows, but all in all, not the greatest finish. If we go to the weekly chart, you can see starting to kind of comfortably come back into this old, very long drawn out range. That's not what you want to see. You want to get that momentum to the upside. Again, if you're a longer term holder, you could still be looking at this as one big continuation consolidation pattern that might resolve to the upside. Tactically, though, for you slightly more active traders, you want to be a little more cautious, defensive, maybe have a sell bias below that 138.50 zone. So that's the way the IWM sort of went out on the week, and the NASDAQ 100 continues to remain unfazed and levitates to all-time highs. Again, big caps here, really supportive. Lots of those names just unwilling to budge, and they are slowly just kind of crawling higher, or really crawling might not be the right word. They are marching higher, some of those large cap tech names, and that's really what's propping up the Qs here. And that's, again, where you're seeing that sort of separation between breadth and some of these names that are really holding up an index like the Qs. So that's the market. Let's take a look at TLT, some of these other major markets, getting some nice follow through off of Thursday's reversal. TLT has been in this downtrend since the 18th, topping out around 124. It's been pulling back ever since that point. If we go to the weekly chart, you can see it's back now, trapped below this old range, 122.50. That's generally been the area where I've been saying I really like to see TLT get back above to be a bull here. Tactically, I think you had a little bit of a sort of micro buy signal here on this reversal, on this gap down with a strong finish back above this support level if you're real tactical and active. Otherwise, again, I'm looking for really a rally to be proven above 122.50, and I'd start to get a lot more constructive on this for a continuation to the upside. So that's the way I'm looking at it. Bulls defending, though, in the very short term. USO continues to kind of chop around here, got all the way up to this $10 level. It's finding some at least hesitation here. These were the lows from March. There's a trend line that kind of comes in here. You get this downtrend line, you get the 20 period and the 8 period. So you get a lot of moving averages, a lot of confluence right here. So it's not unreasonable for price to sort of stall out, wait to see if this is going to be a rollover. Is this just going to punch through and start to move higher? That would be a good sign for the bulls if we could start to just push higher quickly through $10. Maybe this would turn out to just be a nice washout capitulation move with this very high volume day here back on Thursday the 4th. Something to pay attention to. Not seeing any proof of that just yet. Natural gas is getting fuel to the upside. We've seen this kind of stagger itself higher. Lots of tails on the top of all of these sessions, but the bulls are getting it done. 755, 760. That was the general area we were paying attention to for the upside, and it did get that breakout. We're not in it, but something that does look good. It looks like it just did enough to take out the closing highs here from the beginning of April. So for natural gas, the bulls sort of back in charge there, at least in the very near term. And I think that's it for major markets. Or actually, no, let's look at the metals. GLD, a little bit of a bounce here into the close on Friday. Overall, though, they did recover most of that selling from the week. They down just minus 0.15% in GLD. SLV up 45 basis points. So the incredibly beaten up and oversold silver getting a little bit of a snapback this week. That's constructive to see, but still has plenty of work cut out for it for the bulls to sort of continue to march that higher. But heading into next week, got a little pep there. Maybe look for that oversold bounce to continue in SLV. And with that, I think we're all set with major markets. We're going to look at just two sectors. XLF is one that I'm paying attention to. I think this is interesting. We know we have this sort of inverted head and shoulders potential at play here. Some of the bigger banks also demonstrating that same kind of look. JPM to name just one of them that has that nice kind of inverted potential head and shoulders pattern there. And I think it's interesting because this is a pretty influential heavyweighted sector, and I think depending on how this rolls could give you a lot of some nice cues there for the S&P 500 to see which way it wants to resolve. If we start to lose these this general 2350 area, these lows here from the week, and start to roll back over, that would certainly be some bearish developments. But if we can in fact put in this inverted head and shoulders, if we can start to march higher here, that would certainly help fuel the market, stabilize the SPY, and bodes well, just all things considered. So XLF, something to pay attention to next week. And XBI, here's another one that I think is pretty interesting. In fact, it's another sort of inverted head and shoulders pattern potentially at work here. If we take a look at this as the neckline, you can kind of see the head here. Let's draw that out there. And again, you get the shoulder. Whoops. You guys see what I'm looking at here. You guys see what I'm looking at with the shoulders there. So something to pay attention to. Again, not the maybe prettiest pattern, but you can see the development here of support coming in right in between this more or less $66 to $68 zone. And if we can continue to march higher from here, take out the 72 highs, that would be very interesting there. In the risk on biotech sector, that should help the small cap IWM perhaps stabilize here as well. So lots of things to look at, lots of things at sort of confluence levels, or at least consolidating. We're waiting for more definitive moves all around, but hopefully that gives you something to chew on heading into next week. I need to head out of here to catch a flight to pick up some friends, and that is it. So thanks for watching. Have a good weekend, and talk to you again soon.